What is going on, guys? Welcome back to the trade grid. And yes, today we're going to be talking about an order block strategy using an indicator that's been around for a while, but I'm going to show you guys a more simplistic way to use it. Let's not waste any time. Let's hop straight into the charts. So we are on the ticker SPY 5-minute time frame, regular candlesticks, and we're going to be using, click the indicator icon, and we're going to type in order block, and we're going to be looking for the order block finder experimental editor's pick. Now, once the indicator shows up, we're going to change a couple of settings so we can identify these areas of where the order block sits a lot better. So we're going to go up to the order block finder. We're going to go to settings. We're going to go to where it says color scheme. We're going to change from dark to bright, and where it says use whole range highs and lows, we're going to check that so that we can identify where these areas of the order blocks are at a lot better. Click the OK button. Now, order blocks are similar to support and resistance, supply and demand. It's where there's interest in areas of the market where there's could possibly be a potential reversal or resting liquidity sits. So just pretty much areas of the market where there are large amounts of orders ready to be executed, right? So we have past and present. We have the past order block areas and we have our present order block areas. Now, what we're looking for when we're looking at the present area of order blocks is the area that shows the bullish and bearish lines going across. Those are the most recent areas of interest where the order blocks are sitting. We also want to be able to identify our previous order blocks just in case we're able to find some potential entries there too as well. Now, so what we're going to do is we're actually going to manually draw out the areas of the order blocks to help you guys see it a lot better. So we're going to go straight over to our toolbox, click that, and we're going to go to the rectangle icon. And what I'm going to do is I'm going to manually draw out these areas of order blocks. Now, the order blocks look like signals, right? They're not going to show up immediately. So this order block would not show up as soon as that candlestick hit a doji. It wouldn't just show up. It would wait until the market makes a strong move either to the downside or a strong move to the upside. Probably about 3 candles. You won't see this icon pop up for until 3 candles going down, right? So just, prepare yourself. Don't expect this to pop up as soon as it hits this higher high right here, right? Once the market starts moving down strongly is when you can identify where an order block will be placed, right? So let's take this area right here as far as where our interest area is at. So I'm going to take from the top of the arrow down, and I'm going to draw it all the way across, right? So this shows me where an order block was formed, and if I draw it out manually, I have a bearish order block, right? So now instead of it green, I'm just going to change this to red to make it look a little bit more bearish there. Now, if we take a look at the market and take a look at what the market did, we're talking about something that's similar to support and resistance and supply and demand, where we're looking for an area of interest once the market comes back up to this order block, right? So once the order block would form here, the market came up, down, did a little bit of a zigzag, and it came up to make higher highs, but it could not break the order block, right? This is where we would find areas of interest, right? We would use either price action or market structure to identify an area to get to the market and take this for a bullish or bearish play. Now, the reason why I say bullish play, because if this if the market continued to go up and it breaks through this unmitigated area, then that means we could wait for potential pullback and the market continues to move up, right? So we're looking for different options in different areas, but I'm gonna show you guys an easier strategy on how to identify price action using another indicators. All right, so what we're gonna do is we're gonna go straight up to the indicators tab. We're gonna type reversal, and we're gonna be looking for the reversal indicator by strategical. Let's click that. And now we have the indicator on the screen, and what we're looking at here is areas of potential reversal using price action, right? And before we get into that, we're just going to change one setting to this. We're going to go back up to the icon here so we can get a better accurate reading of this indicator, and we're going to change it from 19 to 24. Click the OK button. And this is just to adjust it a little bit better for the 5-minute time frame. Once again, these both indicators work on all time frames, so you don't have to worry. And what I'm looking for here, once again, is an area of interest or an area that's been unmitigated by this order block. So what this means is once this order block is formed and I draw this out, I'm waiting for the market to come back up, come up to the order block and find a price action area where I can enter into the market. Now what the green R's are for are bullish and the yellow R's are for bearish. And what the R's for the checks mean by is there's a strong potential that the market will reverse in this area. And what the regular R's means that there is a potential reversal. Now both of them are kind of similar from what I've seen when I back tested this indicator itself. But what we're looking for here with this example is we watched that the market came down, came back up to our unmitigated area, and then we got printed a reversal icon. Now normally people would probably enter right here, but I would wait until I can identify an area that's going to exit out of the order block, right? You never ever want to take trades inside of an order block, right? That's just a big no-no. You always want to wait until the market comes out of the order block and shows some type of break in structure. So say like I took this here and let's draw out a quick break of structure here, right? Potential area once the market breaks out of here and breaks past this low, I would be looking for an area to enter for a short play or a put play right here, right? Because I got a potential reversal, I would wait till the market came back up and then exit out, broke structure, and then I would have taken a put play. Same thing with calls. If you're looking for call plays too as well, and you're looking for an area of interest off of a bullish order block. But yeah, guys, very easy indicator to use. Both indicators are able to be adjusted. If you're changing your time frames and you want more order blocks to populate on the screen, you can up the number of order blocks in the order block finder screen here by changing it from 5 all the way up. Will allow you to get more order blocks on the screen itself. And like I said, you can mix this with a ton of different indicators, different oscillators, EMAs, to pretty much kind of help you out with your trading. Once again, I say this all the time, guys, do not rely on indicators to make you a better trader. Always remember your basics. Go back to understanding price action before you use order blocks. Go back to understanding how to use indicators properly before you use these indicators, right? This will not make you a millionaire. This will only assist you into becoming a millionaire. All right. Let me know how this came out for you guys. Until the next time. Peace.